All right, it's prediction time. What are the experts predicting the stock market will do in 2022? What's our prediction? I've got that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. I can't stand these predictions. No one coming into 2020, none of these big financial companies came out and said, you know what? I am predicting in a pandemic. And then we're going to shut the economy down and the stock market will have the fastest bear market ever and then the fastest recovery and the shortest recession ever. No one predicted that and I am angry. No, it just means no one can predict the future. No one can. I'm not going to show you the chart right now, but if I were to show you the stock market, the chart of, all right, well, when the stock market PE ratio, price earnings ratio is at this level, here's what the return is for the next year, guys. It's random. The chart, the dots are all over the board, all over the graph. It's completely random, and yet still, I'm going to succumb and say, well, the big financial companies, they've all come out and given their stock market prediction for 2022. Let's talk about it, and then I'll share my thoughts as well. All right, let's start with the bullish expectations, okay? In fact, history is on our side here. I know the market's been rocky recently, but in years where the stock market, S&P 500, gains 20% for the year, the next year is typically positive as well, average of 11.5% rate of return. So history's on the side here, on the bullish side. Goldman Sachs and JP Morgan, they're both bullish for next year. And they sort of suspect that and expect that, all right, the trend that's been happening will continue, okay? And so take a look at this chart here. Goldman Sachs expecting a greater than 11% rate of return next year for the S&P 500. JP Morgan expecting almost the same thing, over 10%. Some economists that we track here at KFG First Trust is expecting, actually, so First Trust has said their S&P 500 target is 6,000. Okay, which would be, a significant increase. They don't have a timetable. They just expect that to happen before we see another recession. We'll see about that. Another economist that I track here looks at their forecast a little bit differently. They're looking at earnings expectations because the stock market definitely follows earnings. That's how this thing works. And so they're expecting operating earnings to be $215 for the S&P 500, which at a 20-some times multiple, they're also in that 5 to 10% rate of return bullish for next year. Even that estimate said we will gladly increase that profit, that revenue, earnings per share expectation, depending on how the economy goes next year. We could see ourselves increasing that. So lots of bullish sentiment for next year, more of the same. But listen, it's not all optimistic. When I clickbaited this article that I've shown with these graphs, I expected everyone to say, more of the same. Well, not the case, actually. Bank of America is neutral. They think the market's going to end flat. Now, I don't think they think it will be flat, but it will end with little change. But Morgan Stanley is actually pessimistic. They actually expect a 3% drop next year. Now, that is wildly precise, right? So typically these companies, go back for decades. They just think, my forecast is that things will continue on the current trajectory. And so that's what Goldman did. That's what JP Morgan did. For Morgan Stanley to come out and say, well, we think a 3% drop, that's pretty wild. In fact, a 3% drop, I don't know how you have a mild drop with valuations this high. To me, that would be a pretty tumultuous year to end even with a 3% drop. So we'll see. But that's what the experts are thinking. What do I think? I think they're all wrong. I think they have no idea. Okay, no one does. It's a leaf in a hurricane over the short period of time. Here's my prediction. I'm not going to play the game of here's where I think the S&P 500 will be, whatever. Here's my prediction of what's going to drive it. Okay, the stock market follows earnings. You've got to watch earnings. Will inflation continue, and will it erode earnings? Right now, we had 95% of companies report their earnings and they beat expectations. That is unbelievable. This has been, the companies have reported the highest profit percentage ever, record profit margins. If that continues and we see earnings continue to rise, market's going to do great. That's my prediction. Okay, that's my prediction. It's going to be about earnings, which to me is about inflation. Now, the second prediction I will make is the Fed could make an enormous mistake. The Fed is now in a pickle. They've gone out and said that they're hawkish. Now, coincidentally, after Jerome Powell gets reappointed, gets another 4 years, gets job security, all of a sudden his tone changes. Interesting how that happens. And it's going to focus on inflation. It's a problem, and we might be more aggressive in not even being more aggressive with their monetary policy or starting to make it more constrained, just less loose, if that's a thing. And so to me, I'd watch earnings. The market's going to move off of that. And in the short term, and I mean daily, weekly, it's going to be influenced by Fed decision. Fed policy mistakes are the typical cause of a market downturn. Whether that is sustained is usually accompanied by a recession. It doesn't look like we've got a recession in the near future. We'll just have to see. We will just have to see. Those are my predictions. I'm not going to take the bait and give you a here's where I think the S&P 500 will be, or here's what the percentage will be. They don't know. These guys don't know. And while it might be entertaining for you to listen to them, they have no stinking idea. You need a plan. Okay, this is not going to help you. Knowing what someone's prediction is for the S&P 500 or stock market next year is not going to help you retire or not. It just won't. Work with your certified financial planner. You need to be taking a comprehensive approach to all 6 areas of your financial life, seeing how they work together and making wise decisions that bring synergy to those areas, okay? One of those areas is your investment plan, is your investment structure. You should have an investment strategy that takes a multidisciplinary approach, diversified, momentum, whatever it is for you. And it's got to be consistent with all 6 areas of your financial life, okay? And that's the approach that you should take. Whether some expert predicts that the market will continue to do well, whether an expert predicts it's going to do terrible, doesn't matter. You should have investment strategies that connect with all 6 areas of your financial life, help you achieve your financial goals. Your CFP should be helping you with that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K. wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.